Hi guys, it's Yashi today with a real estate update. We're gonna focus on the Zillow market forecast of November 2022, what they say. And we're also gonna look at data that they mention but not as strongly, which I believe has much more impact than what they're looking at. So let's get started. Let's hit record right here and we're gonna go on the file I downloaded from their article. So, forecast. Zillow forecast existing home sales was revised down slightly as leading indicators point to continued slowing in the housing demand in the near term. Home values to fall 0.6% from October to January 2023, and before recovering and posting 0.8% growth by the end of October 2023. So they're going a little bit more conservative. Why are they going a little bit more conservative? They're saying that after we saw a 12% increase in home values between October of this year compared to last year, which by the way was better than what they forecasted in the past. They went very conservative because of I believe the media attention and the negativity we saw around, but home prices still were up 12% compared to October of last year. They expect growth to slow down and just be under 1% over the next 12 months. They saw a large part expectation for more declines in home sales in volume in the coming months. They saw 16% less sales compared to last year in this year here, so 5.1 million sales. And one of the main reasons is the increase in interest rates. The increase in interest rates almost added another $800 on your mortgage payments. We can quickly calculate it here. A year ago, a mortgage payment would have been $1,600 on a $320K mortgage. This year, the same, amount mortgage would have been $2,348. That's quite a large increase for the average American. However, they also mentioned slightly a little thing here. As mortgage rates reach 20-year highs in October, both sales drop, but also new inventory. Sellers are not putting their homes for sale. Now, they're not saying anything about the consequences of this factor, but if you saw some of my past videos, the home prices depend on the demand side, so how many people want to buy a house, and the supply side. And here they slightly mention that the inventory is starting to drop. The question is, will it affect home prices? So if inventory was initially expected by Zillow, Redfin, and many others to increase, and with a whole housing market that has a lower supply because people are not interested to buy, and increasing supply and not decreasing demand will basically create a crisis like we saw in 2008. However, what we initially saw was, yes, an increase in inventory in the beginning of 2022 as people were trying to sell their properties before interest rates would be prohibitive. But then as interest rates were too high, home sellers, which in most cases are people that own a house, want to sell and upgrade to something else, were not incentivized to upgrade, because if I have to pay twice the interest rate on something that is more expensive, what's the point of upgrading? Let me just stick with what I have, I'm good, and that's it. This is why we saw inventory active listings, plateau towards August and September, and then starting to drop. The question is, will it keep on dropping like we mostly saw in the other years? Will it drop more? Will it drop less? Well, if we look at the new listings that are being added on a monthly basis, the data is looking extremely bad for home buyers. Why? Because yes, the trend is that towards winter, supply of homes, new listings are less and less. However, we're under the level we saw in the past 3 years. So we are under pre-pandemic levels, and that is bad. That is really bad. At the same time, this article does not mention that in the past 2 weeks we had a positive CPI report. The Fed, as my report I posted yesterday, my recap I posted yesterday, seemed to be starting to think about when to stop, what level is a good level to stop the rate increases. And the general market sentiment is positive, which dropped the interest rates from the 20-year high to under that. We are now officially under 7% in interest rate. Even if you look on the mortgage calculator apps, it's under 7% by default. So it might incentivize some buyers to come back to the market, which means, is Zillow being too conservative here? I don't know. Fact is, the data shows that we have room for an actual increase in prices or stability in prices compared to what Zillow says. Even if Zillow might be correct, Zillow is still saying that, we're not having a crisis. So if you were expecting a crisis as a home buyer to buy, you might be disappointed. Both, a very conservative report, but also the data are showing the complete opposite. So If you can't buy a house, maybe it is a good time to buy a house before people get used to the status quo of new interest rates, before people realize that prices seem not to be dropping anymore and get scared into having the last opportunity to buy a house. So maybe now is a good time to buy while everybody is still talking negatively about the market. This is not financial advice, this is my opinion, and do your research. And if you cannot buy a house but you're getting close to it, maybe it is a good time to start saving as much as you can before again people get used to the new status quo. Guys, this is all for now. Again, this is not financial advice. If you like what I do, please like and subscribe. If you have a different opinion on this recap, please let me know. I'm open to any kind of opinion. I mean, data is about interpretation. My interpretation is optimistic. Some other people's interpretation might be a little bit more pessimistic. Let's see how it goes. Thank you for watching. Ciao.